Hello everybody, welcome back to the dumpage, the major dumpage. Okay, so I imagine obviously everybody's panicking, and I don't blame you. I mean, obviously, I'm still holding on to a fair whack of coins. I've got a variety of different strategies, and this is, I suppose, something that I try and stress to people, especially on the Patreon. Never be all out, never be all in. I've got spot trading accounts, margin trading accounts, bot accounts, and I've got a ledger. So it's safe to say that my ledger is wrecked. It's wrecked. My spot trading account is almost inoperational, as it's basically we need to find a bottom. Bots are still working, I suppose, to some extent. And margin, well, I mean, it's up to you if you want to mess with that stuff on things so deadly. So let's get to the price action. So I thought I'd bring this to your attention that today we are coming back down to retest this level to which we bounced. It's the reason it's a red line is because below here things do get, could potentially get a lot nastier, all the way down to about 28,000, thereabouts, 29,000, which is where this parabolic, first parabolic run came down to test a level of support. So that, in my opinion, is a very good chance for a bottom, if not this area already. All right, but there's no point in trying to catch knives. There's no point in trying to get clever, because if there's one thing that I've tried to stress to people, throughout, I suppose doing the live streams, the Patreons, and my tutoring that I do for the top tiers, it's that there's no point in rushing into anything. We can't trade anything unless there's signals or even opportunities. At the moment, what we're seeing is that, there's a huge dump redistribution. You call it manipulation. There's a lot of news events, FUD events taking place right now. So that there's no real opportunity to trade, because essentially, we were breaking down, and then obviously things started to get pretty nasty originally when we incurred our first death cross. This is where we started to entertain the prospect of becoming bearish seriously. This is the first death cross that we had for a very, very, very long time. And it was only a 4-hourly, but these do often transpire onto the dailies, to which we've not yet had, but we probably will get in about 2 weeks' time, if we don't break above the 200 exponential, which is up at 41,000, which you might feel as though is a long way away from where we are right now. And technically it is. It's a 25% move just to it, where we would expect probably to see a rejection like we did these last 2 times. So we get our bounces, we get rejections, we bounced again and rejected again. So of course, we look as though, and we will likely stay below there for a period of time. But have we got the death cross yet? No, we don't. And until we get the death cross, that's when it's only when we get something like that take place that we can kind of call this an actual bear market. Right now, it might feel like a bear market, but it's not technically a bear market yet. So if we break down the chart for what it's worth, we can have a look at the way that this ran all the way up and came back down to test this zone. It's just above the 20, just below 29,000, about 28, 29, give or take. So if there were to be a bottom zone, in my opinion, that's likely to be where it is. Obviously, we can front run this, which is what kind of happened at the $30,000 zone, which corresponds to candle bodies. I'm talking wicks as well. So we've got both candle body areas around 30,000. We've got wicks areas around 28,000, where there is a very, very strong chance of a potential bottom. Now, obviously, breaking down below there would be catastrophic. In fact, breaking down below this line right now is obviously going to be pretty bad. But we have to accept that we are going down faster and faster and faster. We've even got the short signal here on the Ichimoku cloud. There's no signs of any. There's no bullish signs taking place right now on this daily. And people can talk about it being oversold, to which it is oversold. Definitely, it is oversold. But at the moment, there's no signals as yet. There's nothing to say that there's going to be anything other than a relief bounce, rally, or whatever you want to call it. But until we break above 42,000 or wherever this 200 exponential moving average is, there's no signs of let up. So for the hodlers out there, I'm pretty confident that things will work out over time. But for the moment, we're just going to have to watch this go down. This is how it works, isn't it? We watch it go up and we get excited, and we tell everybody how well how much of a genius we were for buying back here, or buying this dip, or just buying anywhere really. But now We're not telling anybody about anything. We're not speaking about it. But you know, I've taken it upon myself to talk about it. It's what the YouTube channel's about. And I'm not one of those people that's going to put a picture of my face with my mouth open going, the end is near, or another picture of my face going, buy, 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 this is oversold. You've got to have a rational and reasonable approach to what's going on. So let's have a look at something that might interest you, particularly anyway. So this is the analysis we've done on the technically on the short-term time frames. I run up our first original shakeout after 100 or more than 100% rally from the breakout zone. So yeah, 100% rally, more than that probably, about close to a 200% rally, and then a big shakeout, a big dump back down. We are talking about dailies here. This was looking pretty nasty, picked up around here. So this is not like that. We're talking about price, previous price action. We're not talking about being in a bull run, being supported on moving averages. There's no moving averages below us right now. So this is not going to get picked up like it used to do. We don't have that opportunity. The trend is down. The trend will favour rejection more than support at this level. And the only way that we're going to get through this would be to find a bottom and reaccumulate, I would expect. And the idea is, where is the bottom going to be? Well, at this stage, we could consider this the bottom, this wick the bottom, or this the bottom. And if these fail to be the bottoms, then actually I would actually think about the next level would be just above 20,000. Obviously the reason we talk about 20,000 is because that's where our previous high was over here, but 20,000 is also where we had a bit of a pit stop around here. So again, that's a very reasonable area to assume a bottom form. So this, like I say, this could get significantly worse. I'm not here to give you any, like I said, there's no bullish signs on this right now. If anything, there's only bearish signs on it. But again, you know, in favour of the people that claim it to be oversold and therefore it must be a bottom, there is obviously a point to saying that. I mean, it is oversold. Altcoins are oversold. Everything is oversold. In fact, we could argue that a lot of these altcoins have been oversold for over almost a week now, and it's not stopping them from falling any further. So just because it's oversold doesn't mean that it can't go further. Of course it can. Just like when things are overbought, things always seem to go up. You know, this is why I have this general rule, which is the the money flow index. We always on the live streams, we always look at something and say there's no entry point around here. Of course, it could go up by another 100% or more, but there's no entry point when we have high levels like this. Being overbought doesn't necessarily mean anything, but if we don't take on board the warnings of what that technically means, it means it doesn't justify getting in just because we have to accept it is what we see. So just before we go back in time, we're just going to have a brief recap of something that we've been saying, I suppose, has been on the cards for a very long time, which was bearish divergence on the way up on the weekly. This usually, well, obviously, more than usually, this means that there is due to be a giant correction at some point. So we're getting that correction. And in my opinion, this is a correction which is going to take a bit of time to reaccumulate before it goes back into a bull run. We're still above this Ichimoku cloud. This is still red. I mean green. Still facing up. There's nothing particularly bearish as in bear market territory right now. It's not that kind of setup. Not right now. Obviously, I do favour more downside, potentially down to 20,000, and maybe even lower than that. But right now, that's not the case. And if we actually go to a monthly, what do we see? We've just broken below the 10 exponential on the monthly, leading us to around about a $25,000 zone, which would be the 21 monthly. So that there are zones below us, or many zones below us of potential support. But if we're thinking about previous price action, these are the recent ones. This is also where the bottom of the Bollinger Band is. We also have the green 50, which our candle body is still hovering above right now. And again, previous price action would tell us that if we're above there on the weekly, things could potentially pick up from that level. So let's go to a long-term chart now. We'll go to Bitstamp on there. On USD, this is versus USD, so slightly different to Tether, but more or less the same. So if we can have a look at the way that this has worked in the previous bull runs on the weekly, we have a nice big bull run here coming down to a massive run down to test the green 50 exponential. This is a massive problem here. Massive problem. So from the bottom to the top, that was a 85% retracement. Even coming down to test it over here, 75% retracement. Still holding on that green 50 exponential moving average on the weekly. This is a weekly chart. This is a 50 exponential moving average on the weekly. We tagged it more or less once, twice, 3 times, 4 times, and away. Even when we had the bubble pop, we came down to hang around for a little bit before it moved back up. And clearly this was much more of a bubble pop, and this is very much in keeping with the market cycle, time frame wise. And I guess, and we shouldn't really hold too much on time frame wise, but generally fourth quarter seems to have it, and it more or less is directly related to the way that there's a halving event and blah 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 blah. You've heard me speaking about it before. Halving event happens. Prior to that, it's priced in. Halving event happens, kind of goes a bit sideways, then perks up as the realization of a scarcity starts to kick in. Then it gets completely overbought, and then it bubble pops. But even in all of these scenarios, we bubble pop, we come down to the green 50 exponential and have decent bounces from it. Even in the bubble pop moment here, we bounce from it massively. On the first test, which was about a 73% move, and on the second attempt we broke down to it again. That was a 55% move, each time performing essentially a lower high, and then finally breaking down to it and reaccumulating on the 200 exponential moving average. From there, we went sideways and reaccumulated, and essentially went into the bull run that most of us are aware of, the one in 2017. And even in this one, we see we broke above the green 50 exponential and started to dance around it, perked up, broke down to it, and continued with that kind of pattern until we broke all the way up here. And then even on this bubble pop zone, and again, this was a significant bubble pop, everyone is aware of this one, we came back down to earth quite quickly, wicked down a little bit below it, but bounced essentially from it. So it's that from bottom to top, 70% retracement, and then a bounce of 100%. Not too bad at all. And then obviously broke down below it again to the tune of 46%, and again, we bounced again up from it to the tune of about 56%, breaking down below it, clipping just below the 200 exponential, reaccumulating here at the very bottom. And it's important to note that this bottom, if we were to measure it, marks one of the very first retests or resistances of the initial parabolic attempt. So a nice big run here from the green 50 exponential when we came down to test it. Remember these levels, this is a green 50 exponential, we tagged it here. We came up 278% to that level. And then broke down again. Shakeout essentially before the big bull run. And look, on this way up, we come down to test this 50 exponential on the weekly many times, even in the worst case scenarios, in the big bubble pops in 2017, 2013, and the bubble pop of 2013. The green 50 exponential had it at least for a couple of attempts. Now what we have in here is a retest right now of that green 50 exponential on the weekly. So recognize this for what it is. Yes, we've wicked down below it. That is true. We have wicked down below it, but we are still technically above it. If there was ever a place for a relief bounce, even in a bubble pop moment or an end of a bull market moment, this is the place for it to take place. Now we're talking weeklies, aren't we? So this is a weekly chart. We've gone through a few examples now on the weekly where this is proven to be pretty relevant. On this original first bull run here, the first component to this 2013 bull run, big move up. What was that? A 70-something% retracement. A relief rally, come down to it. Another relief rally, come down to it, and then a big parabolic blow off top, come back down to it after an absolutely devastating collapse. And I mean, truly horrendous bubble pop, 70%, no big deal. This is the game we play. A wick down below it, which is something worth recognizing. But even with this wick below it, we did stagger ourselves back above it and had, what was this from what I remember, it was about 100% bounce, was that? Give or take. So what we're looking at now is hopefully something along those lines. All right. So even in the worst case scenario, where this was the end and this is the end of the bull run, okay, the bull run, we come down to test the green 50 exponential moving average, and we should expect at least a relief rally of a decent significance to take place around this zone, because history has shown us that this is a very important moving average for Bitcoin. This is a very important moving average. Now, if this breaks down after, or even if it doesn't even get that relief rally, which it should, but if it doesn't get it, this seems to be the area to reaccumulate at, around about, give or take, well, this says 15,000. This is dollars, so it's slightly different, but between, you know, the upper $15,000, $16,000 zone. So this is something that's worth marking off, and also it kind of corresponds to around this kind of figure. Which is before this really started to take off to a massive parabolic moment. So this is where we are at right now. This is still going up, surprisingly, but obviously it's going to go up. Every day that we're above it, it will move up. But we have areas of resistance, support. So there is obviously confluence to around about the $16,000 zone as well. But, you know, the way I'm choosing to view it right now is that in many ways, we could easily bounce from here, reaccumulate around these zones. This zone here is an important one to recognize, and yes, there's been a wick below it. We've had wicks below it before, even in bubble pops, and we have massive bounces, 100% bounces or more. We can even come down to it and recover from it to go into another phase of bull run. So when we broke down here, like I say, time-wise isn't something to really think about, but if we think about what happened in 2013, it was around April to crashing down in May, even coming down further into June, July, retesting it around October, September, blow off top. So, you know, thinking about it in terms of fractals and previous price action and the way it was timed and this, that, and the other, you know, it's something to, I suppose, keep in the back of your mind, but it's also not something to hold on to dearly. Really, if anything, it's about the relationship to moving averages, which is one of the most important things I would ever say about trading. Moving averages tell you a lot, and they will give you supports that you wouldn't see generally unless you were using them. And we can see that this one, the Green 50 exponential on the weekly, has had significant reactions, whether it's in towards the end of a bull run, where we go all the way up, come down to test it, and then have another stab up, or at the very end of the bull run where we blow off our top and come down to crash down below it and then have a nice decent relief rally from it. And again, you know, using it as a launch pad to move up again into the next phase of the actual bull run, all the way up over here, all the way up to the 2017 top. So, like I say, there's no definite answer to the way that this is going. Nobody really knows. But if we apply the same logic, the same tools that we would apply to anything, whether it's a 5-minute time frame, or a weekly, or a monthly, or whatever, history has shown us that even in the darkest days of the darkest hours, even in the bubble pop territories of 2013, 2017, that this moving average should have some kind of relevance and a decent reaction from it, even if it is just a measly 40, 50, or 100% rally from where we're at right now. 100% rally obviously would bring us up to our previous top, but we should get a reaction from it. And of course we have wicks below it, we've seen that before, but we've come down very fast, very, very, very fast. Just in the last couple of weeks, we've come down 50%. Now the weekly candle will close today, and it depends on where it closes, obviously, to recognise how far it'll go down. It can go down further than this. It can obviously go down to this area that we've marked off, and then reaccumulate around there, getting ready for the next bull run or the bull market, or maybe even a complete change of cycle. Either way, all eyes on the weekly close. Let's see how we go from here, and I'm very much in favour from at least a relief rally from this zone here. As far as altcoins are concerned, I'll have to leave that for another video altogether. This one's gone on long enough. But either way, things, if you've sailed it down this far, if you've gone this far, when we're talking about Bitcoin, not altcoins, but if you've sailed it down this far, this should be at least a glimmer of hope for you. It's not trading or investment or financial advice. Obviously, you all know that. This is me documenting my own trades, and this is the analysis that I'm applying to it right now. So if there was ever a time to, I suppose, for me, to stock up again on Bitcoin, it's around these zones, even if it's just for a measly, whatever we're expecting, 20, 25, 30, 40, 50, 100%, or continuation of the bull run. Remember, sometimes when you look at these charts, they can be deceptive. You put them on the log scale, it kind of gives it a bit more tangible a bit more of a, I suppose, something to grasp onto. Obviously, diminishing returns the higher we go up, because the bigger the amounts, the more money that goes in, the lesser the size of the candle bodies. But the relevance of these moving averages still play a big deal for me, and the vast majority of Bitcoin's life is spent above this green 50 exponential moving average. And when it gets significantly bad, we break down below there and we reaccumulate around the 200. So again, even if we do this, 16,000, if there's ever a time to harvest a kidney and put it into Bitcoin, it would be around this zone. I hope that no one does actually harvest their own kidneys to put into cryptocurrency, but it'd be worth entertaining the idea of harvesting maybe one kidney, because you could survive on one kidney for a period of months, which is likely all it would take when we're down at this low level before it to start moving up again, and then you get yourself a brand new kidney, or maybe one that's encrusted with diamonds. Anyway, I'm going to leave it with you there, but thanks for watching. I hope you have a nice day. Take it easy.